So I'm just going to go over the slides in the Instagram post that probably got you here to watch this video. And then we're going to go into the process, the step-by-step of actually how this all works, from purchasing the property, writing the offer, right through into the construction. So here we go. $30,000 added for the renovation. It's broken down like this. Just know $30,000 for now. We're going to get into this in more detail about halfway through the video. So this slide just shows you the numbers without any of the renovation included in the cost. So you can just kind of skim through it. $929,000, minimum down payment $67,900. It's a high ratio mortgage, right? Less than 20% down. Property transfer tax is based off the purchase price, $16,580. Estimated closing costs would be the legal fees. Put that at about $1,200. Total funds required to complete $85,680. You skip down to the bottom. So in the black it says the mortgage payment is $4,142. And then we're estimating that the basement suite would rent for $1,700, giving you a net monthly payment of $2,442. Remember, this is a high ratio mortgage, so it's 25-year amortization, and you had insurance on top, like CMHC insurance on top. That's why the payment is kind of higher at the $4,142. Here we go, including the renovation into the mortgage, so we're adding that $30,000. So the purchase price stays the same. The minimum down payment goes up, right? So it was $67,900 before. Now it's $70,900. Property transfer tax stays the same as it's based off the purchase price. Closing costs stay the same. So total funds required $88,680 now, where it was $85,680. So $3,000 more. Then we take the $929,000 plus the $30,000 renovation cost, puts what we call the qualifying purchase price at $959,000, right? $929 plus $30,000, $959,000, and that increases the mortgage payment slightly to $4,272 minus the $1,700, giving you $2,572 for a net monthly mortgage payment. So if you subtracted the original payment, $2,442, from the one including the $30,000 for the renovation, $2,572, that's going to have a difference of $130 a month. All right, let's get into the property and go through the process. It's a standard Valley Cliff special. It's got the nice view, and it's in a nice cul-de-sac. So let's assume, as the buyer, that you found sort of the place that you love. It's got the 2-bedroom suite, so you have income coming in. And the only thing you really don't like is you wanted an open concept house, but you really like the neighborhood, so you're torn. So you decide, okay, well, what do we need to do? It's going to be about $30,000 to take out that wall, redo the ceiling, redo the floors, and just make it look like the house that we absolutely want. So that's where you'd use this program, right? You've only got a certain amount of money. You can't do the renovation after you purchase. You're kind of maxing yourself out to get to the down payment. That's where this program was really handy, right? So you can buy the house, you can add in the renovation cost to the mortgage, and just have that one payment, which doesn't really increase your monthly payment by all that much, especially if you factor in the place having a basement suite. So this is what we're going to show you, and we'll just go on from here, and I'll just lay it all out how it works. So your realtor is going to write the offer. The offer is going to have subject to finance, and then hopefully the seller accepts your offer, and at that point we gotta get the contractor to give us a quote. Hopefully you already have a contractor. Now the realtor will probably put a condition in the contract that the seller has to allow the contractor to go in there, and then other than that, during this say 7 days of subject removal period, you're gonna have your typical income, down payment, and credit to be approved. But you know, if say you were my client, we would already have all the documents in advance, and it would be fairly simple. And then the only other additional one would be this quote for the renovation, because I just want to show you how basic the quote can be. It doesn't need to be complicated. It doesn't need to go line by line on everything. So as you can see, it says estimate to create open concept, so just the basic idea of what you're doing at the address. And then a couple lines, right? Remove kitchen wall, install beam, $10,000, new flooring throughout, $8,000, skim coat ceiling, $4,000, replace all trim, $2,000, replace all interior doors, $1,000, paint ceiling, doors, trim and patch to walls, $3,000, giving you a total of $30,000. Now let's say after the contractor gave you this, you changed your mind and you said,
let's not bother replacing the interior doors. I'd rather get new lighting in the living room. And then on here, you just cross that out, and then you'd put lighting in living room. And we'll keep it at the 1,000 just so our quote stays the same. All right, pretty basic. I just want to show you that because typically there is a lot of back and forth after you get the quote. So I just don't want you to think you got to push that contractor to redo the quote. You just cross it out, write the new stuff, get the final number, and then you guys would, sign at the bottom. Once this is all finalized, you would send a copy to me, and then from there, it becomes part of your approval. So it's as much of your approval as in the income, the down payment, the credit, right? This is going to approve the value of the property. We're taking a property that was $929,000, and now we're saying that property is worth $959,000. We're adding the $30,000 on top of the original value, or the value that you were able to get the property at from the seller. So that's that, and then from there, the lender has to approve that. They say, okay, well, that makes sense. If you guys do this renovation, it's $30,000 value added. So that's how we get to that $959,000. As this is a high ratio mortgage, if there is an appraisal required, it wouldn't be through myself or the lender. It's through the insurer on the back end, such as CMHC. They would order it directly. And say they did or say they didn't, either way, they would give their stamp of approval on the value, and they also underwrite the whole file behind the scenes from the lender. And then after everything is approved, at that point, you're fully approved and you can remove the subject to finance.
So then once it's approved, the lender is going to issue a mortgage commitment. Inside this commitment, you're going to see some conditions that aren't in a standard one. These would only be in one with the renovation kind of purchase plus improvements. So, and it's just going to show you, so I'll just read it. The solicitor to hold back $30,000 until renovations are verified 100% complete. Verification will be satisfied by an inspection from an approved appraiser. Funds to only be released with lender's authorization. So the lender is giving the full amount to the notary or lawyer, but they're only allowing the release to cover everything except for that $30,000. So when you're doing this renovation, you have to pay the contractor out of a Visa or borrow from someone or a line of credit. You don't get that $30,000 up front, right? I just need to be very clear on that. So verification will be satisfied by an inspection from an approved appraiser. That means that once the renovation has been completed, I'll order an appraiser to go in there and do an inspection. They're not comparing it to other places that have had renovations for value. All they're doing is they're going to pop in there. They're going to take a couple photos, make sure everything that was in the quote is completed. And that's really about it. And then some lenders will require proof of paid invoices. I try to stay away from these ones when I do the purchase plus improvements financing. It can just get pretty tricky if you've lost an invoice, or really, it's just, why have that if you don't need to, right? Let's just go with a lender that would just allow for the inspection. And then you're also going to see the improvements to the property must be completed in accordance with the quote that was provided by the contractor at the time of application. Any deviations from this may result in funds not being released. So if you say the quote was to say repaint the ceiling, and then instead you decided to put new lights in the bedrooms, and in your mind you're like, oh, it's the same price, it doesn't matter. To the lender, that's not okay at all. It has to be exactly what was on the quote, has to be what gets completed. So once the lender has signed off and you have the full approval and you've signed the commitment and I've sent that back to the lender, we can remove the subject to finance. At this point, you would put down your deposit. Don't get that confused with the down payment. Deposit's negotiable. You and your realtor would work that out. And then it's a firm deal at that point, right? So the next step after that would be to go to your notary or lawyer and sign all the paperwork. And inside this paperwork, I'm just putting this on here because in addition to the normal stuff you're going to see, you're going to see those notes again about the money getting released and the funds getting held back and all that. So let's say now you own the place and you're ready to start the construction, you got your contractor in there, you're going to have 120 days to do this renovation. I mean, it kind of varies from lender to lender. We would know, depending on which lender we went with, I would be able to tell you up front. But if you just thought of it as a general rule, just so you have 120 days to complete the renovation, it's kind of an important one. And also, your stress level, from what I've seen, is going to be pretty high here. I mean, you've just put down all the money you have for the down payment and to complete on the property. You're starting to rack up your visas to do this renovation. It's a hard time for people for sure, but you just got to push through, and you got to see, you know, what you're going to have at the end. And then once the renovation is completed and we've got that inspection from the appraiser, and I will send that in to the lender will look at it, sign off on it, then they would contact the notary or the lawyer, and they will release the funds, and you can pay off your visa and pay off whoever you borrowed money from, your line of credit, and you have this house that is exactly what you wanted, open concept in the neighborhood you wanted to live in, and everybody's happy. It's a big win. So if that makes a lot of sense to you guys, or if it doesn't, let me know. It's a really cool program. From what I've seen, especially up here in Squamish, a lot of the houses haven't been renovated, and it's really done well for people and allowed people to get into a house, say, that, you know, maybe they wouldn't have if this program wasn't available. So feel free to give me a call anytime. We'll have a chat about it. Thanks, guys.
What up, everybody? I'm standing in front of my house here in Squamish, BC, right across from the chief. Part of the reason I have this house is because of Lee O'Callahan hooking us up with a mortgage when the banks couldn't do it. We went to many banks and they all denied us. Lee said he could get us a mortgage, and he came through and he did it. He showed us the numbers, he made it work, he walked us through the process. Super easy to work with, super attentive to whatever we needed, always got back to us when we needed answers. He made it work. And in the future, I'm going to be buying lots of houses, and I'm going to be buying them through you, Lee. Thanks again.
Hey everyone, just wanted to say thanks again to Lee O'Callahan for getting me into yet another good mortgage into another house. Lee's been helping me out since 2012, getting me into quite a few places. Smooth, easy, great guy to deal with, very friendly and personal. Thanks again, Lee, and I look forward to getting the next batch of money with you.
Hey everyone, just a little note to Lee O'Callahan. Just wanted to say thanks again. 5 years ago, Lee was able to secure this mortgage for our house, moved up from East Vancouver, and didn't really think we would be able to get into our own property. And between him and our realtor, they were able to secure this really great spot up in Garibaldi Highlands. 5 years later, fast forward to now, and we've been able to, using some of Lee's methods of refinancing and using some of the equity we've built up in this place, we've been able to add this great showroom to our property. So thanks again, Lee, and keep it up.